The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on Thursday's trade action, and it ended up being a rough day for old crop corn and KC hard red winter wheat as well. Markets mixed to lower, a bit of a consolidation day. Had those USDA Ag Outlook Forum numbers to take a peek at as well. Joining us here with market analysis, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, always a pleasure, sir. Great to catch up with you again today on, as we were chatting a little bit, kind of a consolidation down day, especially in old crop corn.
Yeah, kind of a tough day for sure. You know, technically it was a bit of a beating and didn't look great. And I couldn't really find necessarily like one thing, maybe a combination of things, another kind of down day in the equities. Like I think you're starting to see investors pull their wings in a little bit. What do you've got friendly in the corn market? You had the outlook numbers this morning, across the board. Higher acres, higher yield, higher production, higher carryout, lower average farm price. A lot of stuff on the surface not really bullish. You're getting moisture in the Midwest. The Drought Monitor map is shrinking. And you just don't have a lot of friendly news. So you can look to Argentina and say, well, maybe a little dry there. For sure, that crop's been in trouble for some time. The Brazil, 40% harvested on beans, making fast progress, a lot more acres. We'll see where that goes. So planting could be behind a little bit, but I don't think it's enough to concern the market. It hasn't been for weeks. So, just kind of a really rough technical day, pushed through some critical moving averages, upward trend line, and Bollinger Band, all likely uncovering stop orders underneath.
Yeah, that's a great point. Hitting some of those technical marks that moved us. I wonder too, corn was doing okay till about mid-morning, and we got the ethanol numbers out, the weekly ethanol numbers. I wondered if maybe that was a little added pressure there in old crop corn to see some of that spread trade between old and new crop, Bryan.
Oh, I think so. I think the general concern. Well, let's back up a little bit. I mentioned the stock market. Stock market's been down. There's a concern of rising interest rate prices and inflation. Those things that were kind of the same things that were plaguing us a little bit earlier on, and then it looked like the Fed was going to and they did. They slowed down to 0.25%, and some apparently on the board had voiced their concern that they should have maybe went to a half. Now it looks like they need to go back to a half. So you have that element, but the ethanol industry is a mature industry, so we need to see good numbers to reach maturity. If we're off a little bit, that might send a signal. I still contend this. I contend that farmers have been readily selling corn right along, especially when prices rally. And so I'm not necessarily convinced that the elevators are jumping through hoops. I don't know. Today was just one of those rough days. Bear spreading was a noted feature. I think traders were flipping some of those short wheat, long corn spreads. Wheat's been down 6 days in a row. First 2 or 3 days, you had corn actually up and wheat down. So I think they're reversing those spreads. And then soybeans hung in there. And give them credit. They're hanging in there. But still, they look a little tired as well.
Well, and you mentioned the Ag Outlook Forum numbers, and you highlighted the lower farm price, the acreage, talking higher acreage, corn, beans, and wheat. But then the yield numbers too, talking if it comes to fruition, record for corn and beans. What do you make of these Ag Outlook Forum numbers, Bryan? It feels like some of them the trade watches, and then some of them the trade kind of just says, "Oh, okay, move on."
Yeah, the whole acknowledge and move on has been really sort of the format for this for a long time. They are considered budgetary numbers. But people do look at this, and when you're tighter supply, and they start looking and say, well, what is the USDA thinking about acreage? So they pull an acreage number out. Where that actually comes from, probably in the bowels of the report somewhere, explains their methodology. But it's the same acreage number as a year ago. So it's up from actual acres because we planted less acres and harvested less because of weather conditions. But when you look at the number, it is a very, let's call it steady or stagnant number. And then you look at the yield number. So you got to take it with a grain of salt. That's a trend line yield number. Do we have the right weather to get there? Time will tell. Time will tell if the acreage number is accurate. We'll have better boots. I always call boots on the ground survey process at the end of March to give us a better educated peak, according to what farmers tell the USDA. So, I was of the opinion when I saw the numbers that, okay, and we're off a little bit, it's kind of old news. Then corn fell apart. So I don't know. I'm guessing that's all it is today, because I don't have definitive analysis of this, that there were probably some funds who said, we've been hanging on to these long corn. It missed its opportunity to rally last week, and we don't want to have too much long here.
Well, and speaking of the funds, I wonder if you've heard anything on this. We haven't had CFTC commitment to traders data now for a couple of weeks. Are we going to see that on Friday? I think a lot of folks are anxious to see what some of these fund positions truly are throughout the market trade.
Well, we, in theory, should have them Friday, and it's been 3 weeks. And the curiosity is where that wheat number is, because wheat prices have been kind of gravitating upward, and then flip over and down 50, 60 cents in a week. And so that the funds move out and then go back at it. Hopefully we get some perspective at least there. But that's another thing. When you look at the corn market, well, why did corn go down today? Well, when wheat drops 50 plus cents in a week, that's not always supportive of corn. And a few other fundamental things I didn't mention talk about India exporting some wheat, and talk that some of the feed wheat that Russia may be offering to the world market all competes for corn. So if you were bullish corn, you were really struggling to find some supportive news on a day-to-day basis. And it just kind of looked to me like the bulls may have sort of trimmed their position or given up here. And then you get those unintended sales that I mentioned, that stop orders are triggered. There's more selling that capitulates the market further downward.
Yeah, just kind of piles on a little bit. So if I take a look at things here, I'm a farmer. I've maybe been doing some selling. I maybe looked at getting some new crop sales made, etc. I mean, as you look at things here, should we be thinking about getting a little more defensive, get some risk management positions in place, more so than what we maybe have done already or haven't done at all, Bryan?
Yeah, so I think farmers have done, and I'd say you keep adding to it. You look at the calendar and you look at it and say, well, look, it's February 23rd. We just don't seem to have friendly news right now. So I'm not saying sell everything, but I'm saying be responsible and don't hold everything. These are still high prices from a long-term perspective. And even though we're down today, March corn is at 660. Remember, it was at 635 the first week of December. So we're still holding higher than we were. I would call today just really disappointing, kind of sobering that, all of a sudden we're at our lowest prices on that March contract. Today got as low as we've been since, like I think I said, the mid part of January. It's like a 5-6 week low. That's discouraging and breaking into some of those supports. So the easiest thing to do right now is probably nothing and say, I don't like this, but if I did something before, it always came back. I don't want to rest on that right now. We need to pick up this export sales pace. The last 3 weeks have been good. I wouldn't say outstanding. And last week was the third lowest of the 3. So you still have this trend where 3 weeks ago the exports were better than they were 2 weeks and last week. So we'll see what the number for this week brings. Monday was a holiday, so everything's pushed back. So we should have a number tomorrow. The bean market looks a little tired. The wheat market certainly looks tired. So it's just sobering. Make sales, get current. Yeah.
Well, and also too, obviously, we talk about this quite a bit. Sharpening the pencil and making sure that it pencils out for your specific operation, making sure your positions and your break evens. That's the biggest piece of all of this, Bryan.
Well, it certainly helps to have those numbers and guide you in your decisions. Still knowing your break even doesn't necessarily pull the trigger. So you got to be willing to pull the trigger. If I could encourage farmers is, you produce a good, so you manage that inventory. There's lots of tools to do that. So there's the comfortable tools, which are cash sales. They all in the end, every sale has to be a cash sale. But there are different methods other than storing in cash sales. So look at those and learn those. Understand what it might look like to have a fence position on, or a stop under the futures market, or things that can help negate risk. If somebody had a stop under the market today, let's just say even 2 cents under yesterday's close in May corn, well, May corn closed 15 lower. So that stop might have get triggered and filled you at 2.5 cents lower. And all of a sudden it's a good defensive posture. And you didn't wake up thinking the May corn was going to be down 15 cents today, but it is.
We are having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing here on Market Talk. Bryan, let's move over to livestock trade, cattle. I know we have a cattle on feed report coming up on Friday. We saw a fairly good day in cattle trade Thursday. I'd have to think cheaper corn prices helped, but then I wonder if this news out of Brazil, the mad cow disease case, Brazilian exports being halted to China, have to think maybe that played in a little bit to some positive market sentiment in cattle on the day Thursday.
I don't think it hurt. Let's put it that way. So, with the market today and the live futures 17 to 25 higher isn't, some earth-shattering day, but it certainly isn't down $2 either. And new highs established here. The trend remains higher. So the bulls got some more fodder today. We don't know if this will be long lasting or not, or if this is, just temporary until they kind of get this sorted out, figured out. In these cases here too, I often wonder, so China may halt exports, but Brazil still has beef, so where's it go? If maybe finds its way in other channels, I really don't. I don't know. But supportive, but the feeder market really explosive, and that goes back to what we've been talking about time and time again. It's just we hear our producers who buy feeders and put them in they're just not out there. They're tight, and their suppliers are saying they're tight, and this is what $200 plus feeders on deferred months looks like. Very strong uptrend right now, trying to figure out what an equilibrium price is for feeders and what the market's willing to pay. I think it's also a belief in these feeders today up. Of course, you had pretty sharp down in corn, but it's a belief that the Drought Monitor map is shrinking. There's moisture in the Midwest. There's reason to believe that there's every reason to believe that there is a reason that we should have, good corn crop this year. We're not going into this bone dry thing, at least not at the end of February. It doesn't look like it.
No, not at all. And I think that's a great point you make about that Drought Monitor, and mentioned it feeders and some of those deferred months, $200 plus. I mean, even some of these front months getting closer and closer. I look at April and May, mid 190s. I mean, that's creeping up there as well. So to your point, very explosive feeder market. Cash country too. Still waiting to see more activity here this week, but that all kind of plays into the picture as well, Bryan.
Oh, it does, and that's the other side of the coin. So we've been talking about the supply side, and this winter weather is supportive. We talked about the weather a little bit here in my home state. It's just sloppy, messy, and it's going to get cold now. And it's 34 degrees at the moment. It'll be down to 12 tonight, and it's just everything's wet and a mess. So not the best conditions, of course, for cattle in the lot, or if they're exposed. And this might be a zero weight gain day. Maybe tomorrow is too. Looking at kind of big picture perspective, we have to take into account that, prices are moving higher and higher, and that the consumer at some point may back off. It almost seems to me, in the beef market at least, that the consumer is still willing to buy. They've been cooped up for a couple of years. They're out. They're still going out to dinner. Everybody's cautious. We keep hearing, about inflation's going to tame it, and the people are still chasing things. So I wonder if the consumer, I don't know if they're being irresponsible, but they're willing to spend the money. And I think people are willing to, when you have kind of a lousy stock market. You get high prices here. Things aren't real good everywhere. So I wonder if people don't turn to comfort and go out to eat. That seems like they're willing to
Yeah,
pay it. So
very true. Very true. Hog trade was relatively quiet on Thursday. Dairy market, last I looked, was mixed lower. Any thoughts in hogs or dairy, Brian?
well, the hog, expect the high volatility, but again, we're looking for smaller numbers on hogs. So we can't get away from that. And the summer months continue to, be really volatile. Wasn't much of a change today in the futures market. The dairy industry struggling. Milk production report out this week. Again, milk production increase 1.3, I think it was 1.3%. It's just a market that's trying to produce its way out of too much supply. And that's typical in the dairy industry. We keep seeing this, repeat it, a little more cows, holding them, more milk per cow, more production, and the consumer isn't gobbling it up. And so we just talked about beef prices being high, but they sure don't seem to be willing to, and maybe they are buying it high and they're not buying as much, but it doesn't seem like we've got this extra demand. And I think part of that is kind of like fluid milk. I mean, if you're a
Mhm.
stingy shopper, and I can use my wife as a litmus test. She goes in the store. If it's not a good price, she's not buying it that week. And milk is in that category.
Well, Brian, always appreciate the insight into the market trade. Any final thoughts you have for us here today?
Well, I think today was sort of a warning shot across the bow on old crop corn, just how fast things can go down. I've been kind of preaching that for a long time, that when things tip over, they drop fast. And this is not last year. There is no worry about whether I'm going to get fertilizer. It seems like everybody's got fertilizer. Natural gas has been on a decline. USDA numbers are not bullish. Uh, uh, in January, remind you, they cut harvested acres but added yield. So you
Mhm.
didn't get a win out of that. So things are snug, but expectations are for increased production in the year ahead. So just recognize how fast things can kind of fall apart. New crop corn and bean prices still at very high and respectable levels historically. Don't be afraid to get started.
Well, Brian, if folks have questions, need some advice, they can reach out to you. I know at Total Farm Marketing. What's the best way to get in touch?
Best way is a phone call, 800-334-9779, Jesse. Otherwise, what I'd ask is if you want to send me an email, it's Bryan with a Y, and that's Bryan at totalfarmmarketing.com. And then we've got a good website to look at there, www.totalfarmmarketing.com. Good resources there. Got some good booklets there, different marketing tools to take a look at. No charge to any of that. So our goal is to help farmers be informed, and we think we do a good job of that.
Well, we appreciate your time and insight. Brian Doherty with Total Farm Marketing. Have a great weekend, sir. We'll talk to you next week.
Thank you, Jesse. You as well.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.